What is up, everybody? It is Joe Caruso here from Trader Society Academy with a trade management video. So I'm going to start this one off by going through a couple different trades I was in the past week and show exactly how I manage them. The first one is going to be a Eurocad trade that I had sent to the Discord on Wednesday. The trade came into play Thursday into Friday. You can see I posted it February 8th at 10 o'clock in the morning, Eastern Standard Time. So this is Eurocad on the 4-hour time frame. This trade had a lot of confluence on the higher time frames, on the weekly, on the daily, on the monthly. I previously did a trade breakdown video where I called a trade up at the top. And this trade was a continuation of that move, basically getting in at the higher low, which continued down to make a lower low. The confluences that we have here are support turned resistance, the 50 and the 200 MA cross. I had two trend lines. It was a 382 fib level, and my stop loss included the 0.5 fib level and the 618 fib as well. So I'm going to scale this down onto the 5-minute and show you exactly how to manage this. So the entry I had called for the group was 1.44450, which was not in at the very top. Now, again, getting in here, what we typically do if we get in around the 50 moving average on the 5-minute is we need to look for some type of confluence to go against us before considering moving our stop to break even. You cannot move it too early, especially in this position. So as soon as we enter our trade, we hop into the 5-minute and we're watching our trade unfold. So as we could see, there was a little bit of consolidation, sideways movement, until what caused price to finally drop was this 5-minute coming up, hitting this 200, and then the drop happened from there. Now, the first area of confluence that I see going against me is the 5-minute coming to this 800 moving average, which when I look to the left, lines up with a previous area of support on the smaller time frames. So at this point, it's really the first moving average that the 5-minute hits, or if the 5-minute makes a shark fin. Whichever one of those happens first is going to be the move that causes me to move my stop loss to break even every single time. And as you can see, when price hit that area, we move our stop to break even, and price never came back. What you're typically going to see is on the 5-minute, price is going to bounce from one MA and then reject off another one before moving lower. In this case, it was so bearish that this thing just completely dropped without even touching any of the other moving averages, and pretty much straight to the take profit that was called for the group. Very little drawdown. At one point, there was 10 to 15 pips of drawdown. This is how most of our trade ideas actually go. So now I'm going to move on to the next trade, which was a Euro GBP trade. Now, this one I managed a little bit differently. I'm going to click the 4-minute real quick just to... I was getting in at a trend line on the 4-hour time frame. I had two trend lines crossing, and we had that 200 moving average. Euro GBP had just recently made a higher high, so we were looking to get in at the higher low to look to take this thing up. Now, because it was Friday, I pretty much took the small move and got out at the first confluent area, which is where I would normally take partials at, but with it being a Friday, I had just taken complete profit there. I'm going to go back to the 5-minute and show you exactly how I managed this one. I had two separate entries on this. Now, here's what I do if I get into a trade that's a little bit too early. Because I'm familiar with prop firms and trading on prop firms, I never take my first position too heavy. I'm usually getting in with close to 1% risk, enough to where I'm able to stack into a position if I go into drawdown to find that better entry. And that is exactly what I did here. I had an entry slightly above 0.88300, right around this yellow box that I have. Let me zoom in so you guys could see a little bit better. And then I stacked another entry slightly lower based on the trend line that I had. First entry was on the moving average on the 4-hour, and the second entry was slightly below. So what I did was once this trade started to go in my favor, because I have two positions open, I cut the risk as soon as I can, right? So once my higher position went into profit, I closed it. So I did not take a loss on my original entry. It took slightly longer for it to go into profit, but once it went slightly into profit, I closed it, and then I was just managing my one position that was slightly lower, down at 88277. Now, this is what I was saying before with the previous trade, is that 5-minute 50 moving average is the first moving average that we're coming across on this 5-minute. And it was at this point that I protected my position. 5-minute hit that 50 moving average. I moved my stop right to my break even. As we could see, price did not ever come back to the break even point. This method works for most, it works very well for most of our trades. This is what we want to see, is the 5-minute 50 get broken, used as support, and continues higher. Now I want to show you why I took profit right where I did. And you could see that price actually reversed exactly where I took profit, because we are very technical with the levels as far as why we take partials, why we close the trade. There is a specific reason, specific things that we look for. Now I'm going to show you on the 1-hour time frame. On the 1-hour time frame, I wanted to be out before that 1-hour 50 moving average, which I believe was also making hidden divergence going against me. So when I look here, I got in pretty much around the 800 moving average on the 1-hour. So when we get to that next moving average, normally this is where I would take partials at. But like I said, it was a Friday. I was happy to end the week. I was already up and looking to just take, this last little bit of profit to end the week. So I was not complaining at all. It's got in at one moving average, got out at the next, and I was pretty positive that there was going to be some move happening against me. And that's what makes the trade management so important. Once you really nail your entries down, you're able to pretty much completely eliminate the risk on that trade. Because you get in at the right spot and you know when to move your stop loss to break even, you have a risk-free trade. And then I'm typically looking at smaller time frames, 5-minute, 15-minute, 30-minute, 1 hour, looking for any reason to pretty much take partials at the first sign of a hidden divergence at the 50 moving average going against me. That's 100% a reason to take partials. Position is already protected, so it is risk-free, but that is often a move that can cause price to make a higher high, or in this case, a lower low. So now let me move on to Euro USD, which is a trade I took on a live session towards the middle of the week. I'm going to hop on the daily and show you guys why I took it. On the daily time frame, I was getting in at a hidden divergence on the 50 moving average with a trend line at a level of structure. Those were the confluences going for the trade. Price is very bullish on these higher time frames, so I was looking to get in at a higher low and potentially to see a higher high. I was not looking to take it that high. I got 80 pips out of this move, so I'm going to scale down to the 5-minute and show exactly where my trade was and how I managed this one. Okay, here it is, right over here. This was another one that I had stacked entries on because price went even lower than I had anticipated. So about 20 pips lower, I had taken another entry, and the same concept. Once price got my original entry out of drawdown, I pretty much closed it immediately at break even. So I took no loss on my original position, and then I was left with a very nice position at the low. What I like to see on the 5-minute when I'm entering a trade, going with higher time frame confluences, is that there's a nice gap between price and the 50 moving average. Because again, the 50 moving average is almost always where I'm moving my stop loss to break even. That's the common theme here with our trades. The only time we don't do that is if our entry is basically on a 5-minute 50 move or too close to it. In this case, it was fine. I even had confluence on the 5-minute. When I looked to the left a little bit before my entry, this is why I got in at a slightly higher spot. My original entry was actually a shark fin on the 5-minute at this area of confluence that I was looking for. But price came lower. Price dropped, but the TDI went up. So this made a shark fin divergence on the 5-minute. So there was no way I was going to close my original position when I saw that there was another sign of a reversal coming. Again, this was all lining up with my confluences on the 4-hour and on the daily. So that's why I took a second position there. And when price hit the 5-minute 50, I moved my stop to break even. I exited my original position as soon as it got to there. And the result, again, this is what we're looking for. We're looking for the 5-minute to break that 50. So our position is protected, risk-free completely. Use that 50 moving average as support. And then we came up. Let me show you which time frame and why I took profit. This was during news as well. I got out based on the, let's see if it was right here. Okay, now I got out based on the 1-hour 50 moving average and the 800 moving average cross. This was also an area of previous support that could become resistance. So I saw that the smaller time frames were having a shark fin. I saw that the 1-hour was hitting the 50 moving average and the 800 moving average. I believe this one was also hidden divergence going against me. So again, like these are telltale signs to, at the very least, take partials here. Again, I knew this happened during news, and because of the force of the bearish momentum that happened, even though this looks daily on some of the higher time frames, I was more than happy to take 80 pips from this trade with very little drawdown. Again, 10 to 20 pips of drawdown. And get out at an area that made sense. And this is exactly where price reversed again. So these last couple trades, the areas I pick are based on experience. Areas like you just learn that as soon as there's confluence going against you, that the chances of the trade going against you increase. You know, like say you see a 5-minute shark fin going against you. Okay, the odds of it going, turning, and reversing are not as high. But then you get to 15-minute hidden divergence going against you, 30-minute hidden divergence with the 50 moving average going against you. And as you keep going through these layers, the chances of the reversal get higher and higher. I was glad I got out of this trade because ultimately, when I see what happens now in hindsight, price really didn't climb too much higher and did end up coming all the way back to break even. And that's where we closed the week out. So I was more than happy to take 80 pips off of that trade. The Euro GBP was about 30 pips, but that being one of the less volatile pairs and having the highest pip value, it's pretty much equivalent to another pair moving 50 or 60 pips. And then Eurocad, I believe, was about 170 pips. Now, these were just some of the trades that we called within Trader Society Academy this week. Every week, me and Derek Vandelinder are pretty much calling at least a couple hundred pips with a 95%, if not slightly higher than that, win rate. So stay tuned for more videos like this coming out soon. Feel free to let me know in the comments what you guys think about this trade management, if it makes sense to you, if you guys need more in-depth details about how to do it. And I hope to see you guys around. And there's more Trader Society Academy videos like this coming your way.